Okay, we are going to go through just a heap of random kind of financial mathematics questions around things like income, wages, taxation, and that kind of stuff. So I'll just go work through the solutions. Probably I'd suggest you pause at the start of the question, have a go at it yourself, and then work through my solution just to see how you went. We've got a nanny who's charging $15 per hour, or part thereof, which is a word we're going to come back to in a minute and explain what it means. So here are some of the important bits. $15 an hour, part thereof, but we also want to work out how many hours she worked. So in this case, from 8 a.m. until 3:20. So how many hours is that? Well, I don't know about you guys, but I like to split this into blocks that are easy to work with. So I know from 8 till 12 is 4 hours, and then from 12 till 3:20 is another 3 hours and 20 minutes. So if I add them together, 7 hours, 20 minutes. Now this is where this thing here, this part thereof comes in. So it means if you go into the next hour or the next part of something, you pay for the whole lot. So it's $15 per hour, or part thereof, or part of an hour. So in this case, the 20 minutes constitutes part of an hour, so they pay for the whole hour. So in other words, she worked 7 hours 20, but she's being paid for 8 because she went into the next hour. That's what it means, this word part thereof. So she worked for 8 hours at $15 an hour, and her money for that day is 120, because 8 times 15 gives you 120. All right, we've got a price of an item. So we've got the cost item, then the shop owner increases it by 30% for his markup, for his margin. Has trouble selling it, so now he takes 30% off. So 30% went on from the cost, tried to sell it, and he took 30% off the price that it was now on the floor. How does this compare, the original price to the sale price? Well, let's work through this, because it sounds like on the surface you would just add 30, take 30 off. You end up back where you started, but it's not actually the case. Remember, 30% we can write as 0.3 as the decimal. If you weren't sure how to do that, do 30 divided by 100 in your calculator and you'll get 0.3. So we're always going to work with the decimal version of the percentage. Now I'm just going to pick a random price because we don't know the price of the item. So let's say it was 100. I'm going to give it a dummy price to work with to see how it compares when I do the 30% up and then the 30% down. So let's say it was 100 because that's nice and easy to work with. It's a percentage increase. So remember, in a percentage increase, instead of doing the 0.3, we change the 0 to a 1 because we're keeping the original 100%, adding another 30%, which is this 0.3. So a percentage increase would be 100 times 1.3 gives me $130. So that's what it's now on sale for. That's what it's on the floor for. Can't sell it. Decides they need to discount that by 30%. Now, a discount of 30% is the same thing as keeping 70%. Like if I chop 30% off something, I'm keeping 70%. So if I just work out 70% of that price, that gives me 90, that's meant to say $91. I don't know why you can't see that there. Sorry about that. I know why. Let's get rid of that. Hopefully that came up better. $91. So it started at 100. Went up to 130, and now we've taken 30% discount, brings it down to $91, which means for me the sale price is less than the cost price because we've come back further than the $100 that we started with. It started at 100, went up to 130, has come down to 91. So the answer is the sale price is now less than the cost price. David has a gross income of $890 a week. He pays 25% of that as a deduction in tax. It gets deducted from the gross. And he wants to save 20% of his net income. So there's some important words in there. Gross income is all of the income before anything is done to it. Okay. Then the net income is that gross amount minus deductions. Now in this case, the deduction is going to just be the tax of 25%. So if I work out 25%, that is 0.25 as a decimal. His tax is 222.50. So he gets a gross of 890. Take out the 22.50 deductions, gives him a net income of 667 and 50 cents. Because that's what a net income is. It's what you get in your hand after your tax and deductions have been taken out of your gross. Now, if he wants to save 20% of that, I just need to work out what 20% of that amount is. So I multiply that by 0.2 because that's my 20% written as a decimal, which means he's saving $133.50 in the week. Bit going on in this question. There's a couple of things we need to do. First of all, let's pick out the important things. Always important with the question to go through and try and pick out what the question's asking and what the important bits of information are. So last year he had a taxable income of $87,000 and the tax payable was $19,822. This year his taxable income has increased by that amount. So his last year's tax amount was that. It's now increased. His taxable income has increased by that amount. So if I add them together, his new taxable income, the income amount that they're going to calculate the tax on, is $103,800. So that puts him well and truly in this bracket here, right? It's between 87 and 180,000. So that means there's two parts. Remember, when we work out these tax calculations, there's the lump sum piece at the front here. And then there's the second bit we need to work out, the bit that is depending on how far over the threshold they are. So the threshold here is 87,000. How far has he gone over that? Well, I can see it's this 16,800. Okay, so if I take this amount, his new taxable, take away the $87,000 threshold, the difference is 16,800. So he pays 37 cents on every one of those dollars. So here's the calculation. Tax payable for Luke will be the lump sum part here at the front plus 37 cents for every one of these 16,800. So the way we'd write that out is 19,822 plus, and then in brackets I've got 16,800 times 0.37 because that's 37 cents written in dollar form. When I punch that in our calculator, I get a tax amount that he has to pay of 26,038, and that is the answer to part one. What is his tax payable? Well, it's 26,038. Now, question 2 says, how much extra money will Luke have this year as a result of this increase? Well, let's think about this. Last year, his net income, now remember, net is just the gross minus the deductions. Now, in this case, the only deductions are tax. So, for last year, his net income was 67,178 because he had a taxable of 87,000. He had to pay that much in tax. That's what he got in his hand, 67,178. Let's do the same thing though for this year. His new taxable is 103,800. Take away his tax that we just calculated of 26,038. Means in hand, like what he actually got in the bank this year was 77,762. So the difference between these two numbers, last year and this year, is his extra money. So got to read the question. What are they asking for? And his extra money. So it was an extra amount of 10,584. Fair bit going on in that question, but hopefully you can follow the process. This one looks a little bit more simple. Tom gets a weekly wage of $10.85. He also gets an additional allowance per day of $87.50 whenever he handles toxic substances. Now, hopefully you remember we've talked about allowances are just extra payments you might get for things that are unsafe or uncomfortable, or just to sort of offset that discomfort or danger. Now, always really important to read the question because we're given his weekly wage, but the question says what's his fortnightly income. So really important that you do stop, read the question, because we're going to have to double this weekly wage to turn it into a fortnightly wage of $2,050. Plus we have to add the allowances. Now it's $87.50 per day, and the question says he did that on 5 days. So there's 5 lots of the $87.50 need to get added. So his wage is going to be the $20.50 plus the allowances, $2,487.50. Last question. Sabrina has a taxable income of this, and she also has to pay a Medicare levy. Now, in this case, the 2% Medicare levy is just an extra payment you have to make on top of your tax to cover, hospitals and stuff like that. So our healthcare system. But it's 2% of her taxable income. So let's go through, because we're asked to calculate her net income in the year. Now, remember, net income is your gross minus your deductions. Now the deductions in this question, there's 2 of them. There's the tax we have to take out and the Medicare levy. So let's do that. Let's work out her tax that she needs to pay on this taxable income. Well, she sits in this tax bracket, and remember it's made up of two parts, the lump sum at the front and then the variable piece here. She's over this 37 threshold, 37,000, by this much. So I took her taxable, took away this number here, and the 49,725 is the amount that she pays 32.5 cents on every one of those. So her tax payable will be the lump sum amount from here, plus the bit that she's over times, now this is 0.325 is just 32.5 cents written as a dollar. Works out that she owes 1973.2 and 63 in tax. Now I have to take that away, but I also, before I finish up, I have to work out her Medicare levy, which is 2% of that. So 2% written as a decimal is just 0.02. Multiply that by her taxable income. Her Medicare levy is this number here. Those two that I've got circled are the two deductions that need to come off her gross to work out her net. So she starts with a gross of 87,725, takes away her tax amount, take away the deduction for the Medicare levy, means her net income is going to be 65,257.87. That's it. That was a whole range of different sort of income and taxi type questions. Taxi, not taxi as in get in a car. Tax as in like, yeah, I'll stop. Hopefully you had fun with that. Hopefully it made sense, and well done.